Welcome to episode 85 of Kontrarian Korner. I'm Ben Kellerin. Today we have a very special first-time guest on with us to talk about the different metals, what's going on in energy, what's going on in the base metals, geopolitics, everything from all the current events to all these different commodities, how the kind of geopolitical chessboard is set up and what he's seeing as far as US and China and European relations. I think it's going to be a very interesting conversation, but Giacomo, thanks for coming on.
Thank you, Ben. Thanks for having me. Can't wait to start.
Yeah, no, I think it'd be great to get a little bit of your background because you reached out to me. I was going through some of your work, and it's definitely interesting and a similar area of focus to what I look at as far as financial markets and current events. But for my listeners that maybe aren't as familiar with your work, if you could give a little bit of background, I think that would be helpful before we get going.
Yeah, absolutely. Thanks for asking, Ben. So basically, who I am, I'm a commodity trader. I'm based in Switzerland. I mostly trade metals and some energy fuels, especially jet fuels. And that's why I've been in contact with this topic. On top of that, since most of my clients were asking me about why the prices were changing, so not only the poor price of copper or other commodities, they were asking me to explain what's behind. I start posting on different social medias my view on not only the commodities but also what is linked around that, and that's why I start posting more and more. And now I'm doing that every day, and I have a nice following, and I'm very glad for that. But still, what is keeping me up every day is to understand what's happening in the world and why those things are most of the time linked with commodities.
Yeah, I think it'd be good to get your view on some of the stuff going on in Europe. And there's been like the recent World Economic Forum and some of these different big events like Munich Security Conference. And with your kind of background as a commodities trader and your view being right there in Europe, I think it'd be interesting to start there as far as the relationship between Europe and the US, and then we can get into China and Russia and all these other topics after that.
Yeah, so we could start with the relation between US and Europe. We know that they still are very strong allies. They have a very strong link due to the past, but also due to the trade. Within Trump and the president of the US latest decision about trying to push on Greenland, the control of Greenland because of their rare earths and different metals. I think here the relationships start to get a sort of friction because of the importance of Greenland for Europe, but also for the NATO. And I think this is part of a bigger geopolitical game, is because we know that US is trying to be independent with several metals. We know what happened last year when the tension between China and US were very high, and Trump tried to impose more than 100% tariff on China's imports of import and export because of rare earths, and they were trying to block the export of these elements because it's crucial for the defense industry, but not only. So US now tried to wake up and say, okay, we cannot be that much dependent on another country, so we need to develop our own business and our own independency. And we start looking at some moves that the government did to push some miners, US miners, but not only the US, also other countries try to push in investment and control to get brighter power through all different areas, because China, as we know, they are not the best, let's say, mining country in terms of extraction of the minerals, but they are the best in refining those minerals. So we know with copper, that is a critical metals for the transition, but not only. And so US trying to copy the strategy and try to be independent also on that. On top of that, we know that, speaking about the European and US relationship, we know that US locked an agreement for the LNG. So we know what's happening in Europe with the Russian war against Ukraine, and the fact that now Europe is not importing anymore the Russian gas. Still,
no more Nord Stream. Yeah.
no more Nord Stream, but still we know from the latest data, we know that still the 10% of the overall import of fossil fuels is coming from Russia. So it's not zero at the moment, but it's going at zero. But the LNG volumes are increasing a lot. And Europe is investing in creating all the infrastructure, so the regasificator, the pipelines, everything to import LNG from US. And now we count more than 57% of gas is coming from the LNG, the American LNG. And this is massive for the economy, the US economy, because it's exporting more in Europe, and Europe is being more dependent on US energy and production. So I think this is locking again the relationship between these two countries. And when we're speaking about Greenland, what happened there, and also in Davos, we saw what Macron said, and also Merz, the fact that they were saying, okay, we need to be more independent, we cannot accept this and that. But at the end of the day, they know that they cannot protect themselves. So European countries, in terms of defense, they're not there yet because they used to be protected by US. And so they need to accept some request. And I think now no one is speaking about Greenland anymore because they found a sort of agreement. And US will take the control, especially not only for rare earths and minerals that are located there, but also for the routes, so the Atlantic routes, because US as the key player worldwide in terms of economy, but also power, they need to control the choke points that are located worldwide. We speak about the Suez Canal, the Panama Canal, the Malacca Canal in Asia. So those small choke points are where all the vessels are going, and they are transporting all the commodities, but also the different things that you trade. And the vessels are the cheapest way to transport it, and US control those strategic choke points. That's why China wants to have the access to different routes. And that's why Greenland is that much important for Russia, but also China, because it's a new way to cut the transportation, because it's timeless in terms of travel times. So if you just check the world map and you think that a vessel is starting from Beijing and go to Europe to Amsterdam to sell their materials, if you do the routes from China and you pass on top of Russia, is the timing, the journey time is much less than, for instance, from Beijing to go on top, to go down under
out
the
and around through the Panama
Africa.
Canal.
Yeah.
Yeah.
So that is another important point. So based on everything, what we are seeing now, the two key players that are challenging are not Europe, Russia, or other countries. We're always speaking about these two superpowers, US, that now is the leading country, and China that wants to take their own power and integrity inside the different global trade. So China developed a very strong soft power, not only in Asia, but also in other regions. We are looking also at Africa. We saw that now they are colonizing that. Basically, they are colonizing the continent, not through army or war, but just through investments, developing ports, infrastructure. This is they used to call it colonization 2.0. So it's another way of colonizing a country. But now they have the power there. They have also the resources, because most of the resources of Africa are mining plant are going to China to be refined. And US is not happy with that, and they're trying to challenge it, the control of China.
Yeah. No, it is interesting to see, like, if the kind of Arctic routes do start to open up because of ice melting or different things going on, then we're going to be seeing that become a very important shipping lane. And with what's going on in Europe, one of the questions I had when you're kind of laying out the LNG and oil and gas dependency of Europe, like, is there any push to start bringing production capabilities back to Europe for natural gas, for oil, for some of the stuff that I'm sure could be found in certain areas of Europe, but doesn't seem to be a priority to produce it locally. Do you think that's a change that we could see in the next 5-10 years?
That's a great question, Ben. And I think this is the real issue of Europe. Because on one end, in the past, Europe used to have several mines and also places to get those minerals, but also oil. We see Norway now that is not part of the European Union, and they're still a key player in oil extraction. But still, on the other end, we have all these rules about going against the pollution. So the European Union is strongly against the pollution and to also do this kind of job or create firms that are polluting their country. In order to do that, they are pushing hard to reduce the CO2 emission from several steel mills and furnaces. And to do that, they are outsourcing everything. This is the reality of Europe. So when we speak about the future of Europe, I don't see a comeback in mining or any other sort of economy that is linked with the pollution. I would say that they will focus more on getting it at a cheaper cost possible, but still outsourcing it. We saw that now some of the big oil company, European big oil company, are trying to explore new places, especially in Africa or in other areas, but not there because the regulatory environment that is very hard and is pushy against the pollution that is the hot topic in Europe. So short answer is no.
Yeah. I guess the question to follow up on that is what kind of political changes would you need to see from the EU, from the different countries to actually start to see production capabilities for oil, gas, metals, like any of these different things? Because my view is that over the next 5 or 10 years, the European Union is going to basically crack apart. I think there's other things that might happen with NATO as well, but that's might not happen at the same time. But my kind of longer term view is that the European Union is in trouble, especially with some of the issues like immigration and other things that are creating the political instability in some of these different countries. Do you think a major shift like that would open up the potential to have some of these commodity-based industries start to produce again at home?
So I don't want to be involved in politics stuff because I think it's very risky, but I can try to be as more, let's say, neutral as possible, but factual. So as we know, now in Europe is winning a certain political view, and the view is to keep going with this mentality of being less polluting, to be more open to certain kind of environment that we're seeing now. But at the same time, as you rightly said, Europe is very fragile. There are different countries, so it's not like US that at the end of the day, their culture is similar, the language is the same, and you have the same laws, the same bureaucracy. Here in Europe, everything is different. So from country to country, if you compare France to Germany or Spain to Italy, they have different values, different culture, different way of thinking. So if you try to put all these different brains together, of course, it is difficult to get the same view. That's why, as you rightly say, now Europe is very fragile and they need to understand what to do next. Because if they want to achieve what US is trying to do, so to get reliable energy at cheaper cost and to push their economy and their manufacturing, they need to put a plan and to create a new plan and change everything that they did. They need to invest a lot of money. And to do that, all the countries need to agree. And if just one country don't agree with that, they will not pass the law and they will not put money on the table to do that. So the other way is to destroy the European Union. This is not something easy because European Union is based on trade. And if you destroy that, it means that there will be tariff from one country to another, and there will be not an easy trade as we saw in the latest years since the beginning of the European Union. So this is a very hot question. We will see in the future. I think also that the war in Ukraine helps the country to stay together because they are speaking about to have a unique army, so a united army, and to invest in that. They are speaking to get the energy as a whole, as a united country, not to buy just like, for instance, France, Germany, Italy, all different, to buy their own fossil fuels or energy that they need, but as a united country to have higher volumes at a cheaper cost. So they're trying to do something, but at the same time, they're still thinking about their own interest. And this is not the thing that is working well, because if you are fragile and you are not united as a whole country, that's the perfect environment for other countries to take over. So we see with China, for instance, they're not, European Union is not putting a heavy tariff for in the auto industry or other industry because Germany needs Chinese economy. So they heavily export their Volkswagen, BMW, Mercedes to China. China is the top client for them, and so they don't want to put tariff on China because they don't want to destroy the nice trade that they have. But at the same time, France has a different view, or Italy has a different view. So you see those tractions that are happening every day in the European Parliament, and if you still have your own interest, it's difficult to go and change the strategy.
Yeah, no, I think it is interesting when you kind of pull apart the different industries that are dominant in certain countries and the different interests that are able to kind of push certain decisions. As far as you kind of see where that leads as kind of the breakdown, and there's fragility, instability, all these different things in these different countries. But as far as the different kind of military and political will towards building up the defense capabilities and the defense industrial kind of base in Europe, do you think that's a pretty unified push that they're looking at Russia as kind of the big bad enemy, whatever you want to call it? Like, I kind of like, there's a lot of history between these different countries and like past conflicts over hundreds of years, but do you think there's going to be a united push for Europe to like get more involved than they already are in kind of the Ukraine-Russia conflict?
Yeah, as I told you, I think that conflict helps those countries to stay united, but at the same time, they are realizing that this is not something achievable in terms of investments and in terms of just one brain taking care of everyone. So the answer for me still say the same. So there are a lot of issues. They needs to solve everything, and the time is very short. So just I give you an example. What happened when like before the war started? The German economy was a top economy worldwide. They're still the third or fourth economy worldwide in terms of GDP. But in the past, the economy was going up every year. If we look at the IMF data, what happened? Like they said, okay, we have the gas from Russia through the pipeline and is very cheap, and so we don't need the nuclear plant anymore. So we should switch off those plants. And that's what they did. So they switch off the nuclear plants and they say, we will have just the Russian gas. After, what happened? So the conflict with Russia started, and European Union say we cannot give money anymore to this enemy of Europe. So they say, okay, we will stop buying Russian gas. And now Germany is heavily reliant on LNG, US LNG. But is much more expensive, because you can imagine that the LNG from US is coming through vessels, and after you need to, let's say, reclassify this gas from liquid to gas, and this is very expensive. And after you need to go through a pipe and send it to the different places. So try to imagine the cost, much more expensive than the past. On top of that, you have France. France is a key leader in the nuclear energy. They're sending energy through all Europe, basically, and they're making a lot of money with the energy nuclear plants and the trade of this energy that are having. So at the end of the day, from France, this was a win, but for Germany was a loss. So I don't know if you get my point, but with this mentality and this way of operating, that's not something that could last forever.
Yeah, I think it's definitely not sustainable long term. It'll just be interesting to see how long they can kind of keep it going. But for where that leaves us with the markets, like I'd like to kind of just open up and see what you're kind of wanting to talk about next, because we kind of talked a little about oil and gas and LNG, but I guess maybe we can start into some of the different sectors, like your view from trading some of these commodities. Like, what is kind of top of mind for you right now in the commodity space or in some of the investments you're looking at as far as being opportunities right now?
So right now, of course, LNG is a key point for me, because for what we just said, but there are also other two key elements that I'm watching closely every day. The first one is copper, and the second one is oil. For copper, we don't need to say very much. What we need to say is the fact that the production is being pushed a lot, and the number of mines that are worldwide are not enough. And if you want to develop new mines, the time that you need to create a new mines of copper mines from zero to make the mine working is at least from 10 to 15 years. So, and the demand now is going up every year. And so my view is that will be a huge problem with copper, not for the demand, but for the supply side, because we are seeing with the EV, but not just electric vehicles, but also with solar panels, all the transition that some countries are pushing very hard. One of these is the European continent and also Asia. And if you need to build this infrastructure, this new infrastructure, you need copper, also for the grid, for the Wi-Fi, for everything. Electricity, the electricity demands is going higher and higher every year. If you compare us now and our parents, we use much more energy, so the demand for energy for sure will go up. And without the right infrastructure, we cannot satisfy our demand. So I will say one huge problem for copper. So my bet is that the price for sure needs to go up, and also the infrastructure and the mines needs to be developed. So this is my first point. And regarding oil, this is a completely different story. I think this is a little bit longer. I think here there was a problem with the storytelling. So in the past, they used to tell us that in the future we will not need any more fossil fuels, such as coal, oil, gas, and we'll be completely renewables with completely easy with the renewables production. That's not true. Now the data are start understanding it and start changing their view. And so my idea is that many of the big oil companies, also US companies such as Chevron or Exxon, they started to switch their investment to something more green. And we saw another company that did very, very bad. It's called BP, British Petroleum, that they invested heavily in the renewable sector, but now their latest financial statement and earnings are saying to us that they didn't do very well. So there is a switch off to this kind of investment and going back to the drilling and building new infrastructure for oil, because the demand is going up, as we we said earlier about the energy demand, and the fact that now the reserves are getting lower and lower. Because if the latest 10 years, those companies were 100% okay with the fact that there will be a switch in the production of energy, they say, okay, we don't need to invest anymore in oil or drilling or new oil fields. So that's why now, with the demand that is still high, we need to go back to find new places for oil production, new investment, new drilling. And I think this is another huge topic. So the fact that now the companies are realizing the fact that they need to produce more oil. Maybe some countries, such as European countries, they will demand less fossil fuels, but other countries that are growing in terms of economy, so the Asian countries, but also South American, Africa, the demand for fossil fuels will just go up and up. India, for instance, will be for me the key customer for many of the big oil companies. And we saw what happened now with Trump, that is trying to manage their business with putting sanction on Russian companies such as Lukoil and Rosneft in order to not supply any more Russian oil to Indian refineries, and trying to implement the business for US companies. So a lot of things are happening with oil. And another important thing that we are not underlying or talking enough is the fact that China is not independent with oil. They don't have a huge production internally, and they're still very dependent on imports. So US understood it, the fact that they are fragile there in the oil and gas imports. And so what they did with Venezuela and Iran right now, I think is another play by US in order to not attack China, but to put pressure on them. Because in the past, Venezuela, of course, that was controlled by Maduro, so a more close friend to China than US in terms of politic way of thinking. Venezuela was supplying oil to China to a discounted prices, and that was very good for the Chinese refinery, because they were buying this oil to lower prices and export it or use it, making more profit. The same thing is with Iran. So Iran is another country that produces a lot of oil and gas and is heavily sanctioned by US. And so again, also here, China is importing and used to import massive quantities of oil from them at discounted prices. And so the moves that we saw in January with Venezuela and now with Iran are just to target China imports of oil. That's my view.
Yeah, it's maybe that's a good detour to talk about what's going on with the US and China a little bit, and some of the day-to-day changes, and or I guess month-to-month, the shorter-term changes in how trade is flowing, and some of these different kind of geopolitical events have changed. Like I saw a headline that said Israel received like its first shipment of Venezuelan oil for 15 years or something like that recently. And this I think would be interesting to get your view on it, because you probably have a little different day-to-day routine being a commodities trader. But what's your kind of view on how some of these global trade flow changes are showing up, and how it kind of relates to the US and China? Because it seems to me like there's a lot of signs that the US has started to realize that there are certain supply chains that we are very underinvested in, or not invested in at all, and China has near monopoly control. So what's your kind of view on the kind of tug of war and global trade flows, and how that kind of gives a point of view on the US and China?
So, okay, I need to understand how to start, because this is a very bright question. Okay.
Yeah.
Let's start. Okay, let's start with, for instance, metals. Okay. If we speak about metals that are important for many different businesses, especially the defense, So if you want to build a jet, fighter jet, or a vessel for the Navy, you need to have specific metals to build it. And if you don't have the production in your own country, or you don't have enough production, you are dependent on someone else. And if you are in war with this country, that's the issue. So today, what we're seeing that the volumes for mostly all of the metals are managed by China. If you want to trade in copper, you know that, and if I want to sell copper, I know that if I get a Chinese client or an European client, let's say, the Chinese client will ask me much more volumes, okay, because they have bigger facility, bigger demands, and the things are skyrocketing. And so the market in some countries is more depressed than others. And China is making the market for the metals and the demand. So, for instance, in Africa, the Copper Belt or the Democratic Republic of Congo, they are huge supplier of copper minerals. They mainly export it not all, but the majority to China. So you can imagine the fact that the market is already sized by China. At the same time, we see Chile, Peru, they are key supplier of copper or other minerals, especially copper for Chile and Peru. They are exporting it mainly to China. And so they already locking in the demand. And for the supplier, this is safety, but for China is a kind of control it. I control the supply chain, and I have all the refinery, and the people prefer to make business with me because they know that I ask for big volumes. I don't have to sell it to small size to someone in France or someone in US, someone in Sweden. So also for the logistic cost is much easier for them. And this is the thing. The same thing if we speak about rare earths. Of course, the volume are less, but still they are controlling the supply chain. So if you want to trade with a mine in South America, it's very difficult to get the goods because it's already locked and most of the time with a Chinese company. So that's the real issue right now. What US is trying to do, and I'm seeing it, is trying to protect their company, is trying to put a cap also on the price. For instance, if I'm a US company that needs to do a certain element for a jet fighter, and to do that, I need to use vanadium or tungsten. Of course, and the product is processed in US, of course, will be much more expensive than if I buy it in China. But that's why US now is trying to put a price cap in the market and trying to say to their producer, you can produce it here in my country, and we will not go below a certain price in order to them to be profitable. Okay, and don't lose against China. In Europe, this thing is missing. So the government, the countries are not protecting their producer. The same thing with tariff. US is putting tariff, Europe not as a US. So this is regarding the metal business. If we speak about energy, this is a completely different story. So I think US is still the key players in terms of swing pricing. So they have the production, but they also have the control to the flow and to sell it. And because China here is missing. So again, we are speaking about these two superpowers. They're trying to challenge themselves and they're trying to take the power and to control certain commodities. Of course, there are other countries. We are not speaking about the OPEC cartel for oil. They're a massive producer. They have massive resources, and they're still a very important player in the market. I think they are more accessible from a certain point of view. But at the same time, who's winning here? I think who's winning in all these geopolitical chess and what's happening is the fact that some trading company, okay, the biggest one, such as Trafigura, Vitol, or Glencore, Mercuria, those companies are really getting the profit from this instability, because a commodity trader, and I think this is a job that is not highlighted in the market because it's something that it's more shadow, or this job moves in the shadow because they speak with different people, they travel, they move something, and it's not very easy to understand what they do. What they actually do is that they purchase the commodity from the producer. So they purchase the crude oil, they purchase the minerals, and after what they do, they take the product. So they anticipate the payment and they are the owner of the raw material. And after they can play with what's happening with the market, so with tension, with different routes. When they close the Suez Canal, so higher cost, so they can play with that and they can make money with managing the risk. And so in this specific time, when the geopolitical risk is back, being a commodity trader is more leveraging on risk, and that's where you can be profitable.
Yeah, I think that's it would be interesting to hear with your kind of experience and background, like what does your day-to-day look like and how do you express, say you have a bullish view on oil or copper or some of these different uh metals, whatever it may be, tungsten, right? If you're bullish on something, how do you typically express that view? Like, do you look at some of the equities? Do you focus more on trading a commodity directly? Like, what's your approach typically to um, putting on a trade if you're trying to have directional exposure?
So, first of all, you need to be in contact with the clients every day. So, I think the clients make the demand. Speaking with them, you can immediately understand what the market will be like. So, every year you sign a contract with your client if they're big and they want to have a yearly contract with you. So, based on that, you can understand the volume of a specific product with them. And so, based on that, you can manage also the supply. So, for instance, if in a year you lock in, and making a number just for clarity, 1,000 tons of copper, okay? And say, okay, overall, my clients needs 1,000 tons of copper. But your thoughts are, okay, maybe the demand will increase because the demand of electric vehicles or specific grids will implement. So based on that, you can ask to your supplier to have a little bit more volumes. And so what you do is you will deliver the annual contracts to your clients. So month per month, you will send to them what they ask you. But at the same time, you can make a little bit of extra if you're right with your guess with the spot request. So for instance, a client is asking to you every month to deliver 100 tons of, no, 50 tons of copper. And so you know that in a year you need to send to them 600 tons of copper, but you purchase, as I told you, a little bit more. So with the tons more that you add, you can from time to time ask to your client, do you need more? And if you say, yes, I want just for this month 50 tons more, you can manage with the price, because if the price goes up, as you rightly thought before purchasing it, you can make a certain profit. Like we saw later this year in January when the copper price skyrocket and they touch higher level than we ever saw. There, if you have some copper already in your warehouses, you can for sure generate a nice profit, nice income.
Yeah, it's definitely interesting because there's a lot of big firms that have some interesting histories, whether it's Glencore or some of these different companies that have gotten to be very large, and they're not super public on what they do, but I think it's like a very important part of the market. So, um, as far as the like trades that you make and getting into that a little bit in more detail, um, like do you have a specific time frame if you're bullish? Do you typically go for 3 months, 6 months, a year out, or what's kind of that approach? And do you ever look at some of the individual stocks or equities for exposure to some of these themes? Because there's if you get them right, there can be a lot of torque on the upside, and obviously there are things that can go wrong. But I think there's several different projects or opportunities, whether it's in Africa or South America or even North America, depending on your risk appetite, that look pretty interesting to me.
So, yes, so the important thing in commodities, I think, is to have a global view because, for instance, in a specific country, the demand could skyrocket, okay, but worldwide, no. So you need to understand the shape of the economy worldwide. So it's important to check the data of the economy. It's important to understand if the economy is growing or not, where is growing, okay, and based on that, you need to understand where are located the key players. Like I told you, for metals, you need to check China. Most of the time, the data from China are not very transparent, but you can get the data from the supplier. So you can understand the supplier, where they are supplying to where and the volumes. So it's important to be updated. It's important also to check the vessels, so the amount of vessels and also the rates. So maybe you don't know exactly how many vessels are moving every day, but you know the rates. So a quick way to check if the economy is in a good shape, you need to check the rates of the vessels, and if the rates are higher, so it means that demand to move the goods is more. So there are a lot of tricky way to understand if a market is bullish or not. And based on that, you can make your assumption. And as you rightly said, you can check from some specific company and you can invest or not if you think that the demand will go up. But overall, it's important to have a brighter view on what's happening worldwide and try to connect a lot of different data that maybe if you use it just one data doesn't give you what you need, but if you connect with everything, make you a better view on what's happening.
Yeah, you mentioned shipping in there. Like, do you have a view on some of the different shipping sectors that might be interesting to take a look at? Like, there's shipping company that I own that has exposure to tankers and dry bulk and some containers, but I think it's a pretty interesting time to be looking at dry bulk specifically, but also there's been some wild fluctuations in the tanker market. Do you have a strong view on kind of what the shipping rates are saying for some of these different commodities and subsectors of kind of the whole commodity complex?
So yes, I have it, and my is, let's say, a niche view. So for a specific part of the vessels business. So of course, the prices right now are going higher, not for the demand, but for the tensions, okay, for the geopolitical tensions. So this data needs to be taken with a little bit of, I don't know how to say it, but
Like grain of salt, is that the one you're looking for?
exactly.
Yep.
So it's something that is telling you something, but not the real truth. But if you remember what I told you earlier, the fact about the oil companies that they need to go back to find new production and to find new resources, I think the resources, of course, can be also offshore. So we saw what happened in Guyana, that Exxon invested heavily in Guyana. They found huge resources, and now they rely a lot on that country. And I think that other companies, such as also Petrobras, another big oil company, is investing in the offshore implementation of oil production. So I think if you look at that, this is a trend. We also saw that in Africa, some countries such as Namibia or west part of Africa, they are implementing offshore. So I think my bet will be also related to that. So I will not disclose you everything because it's part also of my newsletter. So for my readers, they can see what are my bet. But the point is that there is a specific service that now is becoming more and more important and is linked with what I just told you.
Yeah, it's definitely interesting to see all these different things going on. And one of the other kind of last functioning smoke alarms, as some people like to call it, is what's going on with precious metals. And I don't know if your view is that we're seeing like a big shift in the financial system and like what's going on with fiat currencies, or if it's just kind of demand for these different metals, whether it's central banks for gold and industrial for silver. But what's your kind of view on the precious metals and where that's headed and what it maybe is saying about the global economy or the global financial system?
So for regarding the precious metals, I'm not the best. I of course I track it every day and I have my view, but I link everything with the commodities that I like to track, and I do it every day. So regarding gold, I think gold went that up because of course, geopolitical tensions, but also because of the fact that some of the major banks they try to force themselves to implement their gold reserves in order to challenge also US dollar. I think US dollar is not going anywhere. It's just will keep their supremacy in terms of reserves. And what we saw that China did with gold and also silver, but especially with gold, is just a way to counterattack some internal problems and issue that they had, for instance, with evergreen bubble that they had in the real estate business, and the fact that they need more stability for their currency. Okay. On top of that, if you just think about the trade of oil, okay, and now we are speaking about petrodollar, okay, everything is linked with dollar. So every trade that we are doing every day is in US dollar. So we cannot escape the fact that US dollar is crucial for the business, for the trade, and for the world. So at this time that we're living, we hear the fact that BRICS they want to develop their own currency, or some countries they want to challenge the US dollar, but it's not possible because if you want to make business and if you want to have energy, and now fossil fuels are still the king, you need to make a trade or a deal in US dollar. So also me, when I trade, most of the commodity that I trade are on the bill of lading or on any certificate is written US dollar, okay, not euro. Maybe internally, if you trade internally in Europe, you can use euro, but when you import, use US dollar. And the same happened to China. They try to do yuan linked gold trade, but the world is based on US dollar. So I think gold, what we saw, is based on the fact that geopolitical tension and the fact that also US, they make it very clear they want to reduce the value of US dollar. Why? Because they want to increase the trade and the power of US to export their products. Because if your currency value is less, it's easier for you to sell your product in another country. Okay, so that's what US say very clearly when Trump starts his mandate in the White House last year, and so that's why we are seeing US dollar going down. And if you have a lower value currency, it's better for your export for sure, because the country that is buying it, when it converts, make a better deal. And that's why also yuan, the Chinese governments not every year, but every couple of years, they reduce the value of yuan to make China the leading export country. So that's a point. And for silver, I think for silver is different because, as you rightly said, silver is, of course, a precious metal, but is also used for the transition. Okay, so if you want to build solar panels, you need silver, but not only solar panels. So China is a massive producer of silver, of solar panels, and they need huge amount of silver. At the same time, US make it clear the fact that they cannot rely on another country to build their energy. So they say we need to do the same. And China try to counterattack the US with putting higher prices on silver. And if you do that, so another key role for the commodity traders is the fact that you need to hedge your position. So when you buy the physical commodity, some of them are traded on certain markets, so like the London Metal Exchange, the CME. There are different stocks like the Shanghai, so different place to hedge your position. So US, what they did is that they bought, silver, to increase their stock and also increase the production of solar panels for their own country. What they did, when you buy silver, physical silver, at the same time you need to short the position. You need to short silver because you buy it from the mine. And when you buy it, until when you from the day that you buy it, from the day that you get it to your plant, and after you put it in the furnace and you melt it and you create what you need, you have I don't know, let's guess 3 months. And in these 3 months, the price of silver can go higher or can go down. And most of the players, they need to hedge the position. So if the price, I don't know if you're familiar with that, but let me try to explain it clearly. So they buy the physical. So if the price goes up, they're happy. But at the same time, if the price goes down, they cannot accept a loss, because when they finish the production of the silver for their use, if the price is lower, they cannot sell to a lower prices because the cost needs to be the same, and also the assumption to sell it at a certain price cannot go down. So they need to sell the future of price of the silver. And if you do that, you are opening certain short position. So what China did is that, US, they open a lot of position to silver, so they short because they're buying physical metals. So what we do, we increase the price. When you increase the price, but your bet is to short the price, what you need to do, you are in a margin call. So you need to put more money to not close the position. And some players, they didn't have the money to keep the position alive, and so that's why we saw the huge rally of the silver prices. I don't know if it was clear, because this is a very difficult topic.
Yeah, no, it was definitely some interesting shenanigans going on over the last like 2 or 3 months as far as what's going on with physical silver, what's going on with the kind of spread between the market in Shanghai and the markets in the West. But I think long term, I'm still pretty excited about where I think silver's going. But like you said, it's pretty interesting and complex supply chain to go from pulling it out of the ground to getting it to a refinery and getting it to a manufacturer to put into solar panels or other finished products. So before I let you go, I do want to ask if there are any other like kind of off the run commodities that are kind of on your radar as far as stuff that might not be in the major precious metals category or energy or base metals, but are there any other kind of commodities that have caught your eye that are a little bit under the radar?
Yes, I think the rare earths are a hot topic. I think there are some companies that will go higher and higher in terms of price, stock price. And I think there are some elements such as tungsten or vanadium that are or gallium that are very important for the defense industry. And the fact that now those companies are doing better because of the tensions, because of the fact that we are seeing war everywhere, and this wasn't the case 10 years ago. I think we should look a little bit closer to these elements and to the companies that are producing those elements.
Yeah, no, I think it is an interesting place to be paying attention to. But yeah, I think we covered a whole bunch of interesting topics. Is there anything that you want to sneak in at the end here that we maybe didn't cover as in depth?
I have a question for you. So
Yeah.
tell me, for you, since I know that you're very active, what's your commodity, like if you need to bet on one commodity that will go higher and higher in this year, for instance, what is this commodity?
This year, like 3 years, I bet your biggest move is going to be in something like platinum. I have no strong view like anything less than 6 months for any stuff. For this year, I think on like a relative valuation basis, I think oil's interesting. But I think if you like, I don't think it's going to be some. I'm not sure if it'll be a parabolic move, but I think the precious metals, if I had to guess on that trend continuing, I think gold and silver is a pretty interesting way to play it. Even like I do think they probably have to chop sideways here for a bit as far as price, like up like $5 or $10, like within $5, $10, $15 range for silver, and I don't know, a couple $100 for gold. But after you kind of get that sideways period, I think we probably have another leg for precious metals. And whenever platinum decides to go, like it's going to be explosive. I think you'll eventually see platinum trade at parity to gold and past gold. So that'll take some time, but when it happens, you get some like very fast moves. And I think we're starting to see what happens when you have a physical market in China, basically showing what the price gap looks like compared to Western markets, because there's a pretty consistent premium, not just for silver, but also for platinum over there. On kind of base metal side, I think nickel is pretty interesting. You need to see what happens with Indonesia, obviously, because they're basically the
Correct.
OPEC of nickel all by themselves, right? But I think that one's pretty interesting, and there are some like very small companies that are have some projects that I think are going to be massive. The one that I think has got a potential mega deposit is Talon Metals in the U.S. here, but I think nickel's interesting. Copper, I think probably trends higher as well. It's I don't know how much, like how far that's going to move this year, but over the next couple of years, like I think you're going to see a supply issue for that one as well. I think another one to keep an eye on is tin. There are like only a handful of companies that you can get public exposure to it, but I think that one is under the radar for sure. But yeah, there are a bunch that I think have an interesting setup from here. I think there's probably some sideways chop in some of them to kind of work off some of the recent moves. But if I had to pick one for this year, and I was playing for like a relatively conservative side, it would probably be gold. I think 6,000, 7,000 by the end of the year is like pretty reasonable guess. And then if you're a little more aggressive and willing to take the volatility that comes with the paper market games, then you look at something like silver or copper or platinum. But there's like a whole bunch of different commodities that I think are starting to wake up, and people are realizing that there's a benefit to owning stuff that can't be printed and stuff that is a real physical hard asset, because broadly, I think we're kind of entering a period where a lot of these different commodities have supply constraints, and it might not be like a demand driven commodities boom where everything goes all at once. But I think we're going to see continued supply issues over time for a lot of these commodities, and they'll pop up at different times and be extreme in certain periods over the next 6 months or 2 years. But I'm generally bullish on most of them. There's only a couple where I'm not super excited about, and like one of them is kind of natural gas, but that's a little bit different play here in the U.S. versus LNG. So it's kind of a complex market there. So it's kind of a long rant, but I think there's a lot of different opportunities in the commodity space. So
Absolutely, I agree with you. Especially when you mention nickel. I think we didn't speak about that. And you rightly say that there is a monopoly because the Indonesian companies are literally making the price of nickel. But we saw recently that they had some difficulties in terms of production. Also, something happened there in some mines. But the Indonesian mines of nickel are managed by Chinese companies. So again, it's China that is controlling them. So the owner are Chinese, and I don't trade with them. I trade with other nickel companies that are worldwide. But the point is that those Indonesian, they try to push down the prices to get the other player out of the market. Okay, so I just one example. This company is called Anglo American. They sold their asset in nickel because they were making money because of the Indonesian. And I think this is something that it cannot last forever, as you rightly said. So if the Indonesian will stop pushing down the prices on nickel, I think also other players can go back in the market. And I think that now there are less players in the nickel market, and so this is good for the price. Okay, so also me, I'm very bullish on nickel prices for this year, and also for the others, because with this geopolitical tension, I think moving things all over the world. If we speak about tariff also, and just moving commodities will be much more expensive. So of course, if it's more expensive, the price will go higher. And as you rightly said, also here I agree with you, with the LNG, especially the Henry Hub's prices, I think they will go down because of seasonality, for sure. Now we are going out of winter, but also because on the production. So there will be much more production for the US facilities. They are implementing more and more, and that's good. That's very good for US export of LNG, because if the price is lower, they can be more affordable and more competitive. So I think everything makes sense.
Yeah, it's a bigger gap to arbitrage if they're pulling it out of the ground for $2 and they get a sell in Europe for 8 or 9 or whatever the price may
10,
be,
yeah.
as those start to kind of come down and equalize. Because I think that gap will tighten up a bit, but we'll kind of see where that goes. But there is a lot of LNG capacity kind of set to come online between now and the end of the decade. So if my listeners are looking for a place to find you, find your work, find your social media, where should they look for you?
I think on Substack, where I publish 3 times per week my view on the market, especially the topic that we covered today, and I update every week about what's happening. On LinkedIn, I have my huge following base is there. I have more than 50,000 people, and I publish, let's say, 3 posts per day on big topics, and on X, where I update with more posts every day, because there are more peels or just quick news that I think are relevant.
Yeah, no, it's definitely a good place to get kind of updates on some of these different markets. And I do have to ask my traditional closing question, which is, what book should I add to my reading list? Can be history, finance, investments, even fiction if it's something that you've been reading recently. But what's a book that you've read lately that you think I would enjoy?
So recently I read a book, but is not linked with commodities. Is a very nice book for Renaissance. It's called The Prince of Machiavelli. I think it's a nice read, but it's not linked with commodities. But what I read about commodities, and I think is a master. Is a book that everyone that are interested in commodities should read. Is written by Javier Blais, and is a story about the founder of Glencore. It's called Mark Rich, and this guy created one of the biggest trading company, and that now is called Glencore, but the past was Mark Rich, and it's called the Oil King. And basically is the story of this guy that started with metals and after understood the oil market. And in the past, they used to be the Seven Sisters, that they were the company that were dominating the oil market, but they were just doing contract sales, let's say. And he understood the spot market, so he started selling oil with the spot prices, and he completely changed the market. And after this, they speak about the story of this guy that he made some not savvy moves because he was a Jewish guy from Israel, so he did something also with Iran. So again, I think the story repeats sometimes. And after he had some issue with the U.S. government. So it's a very nice story. It's about a trader in commodities and how he managed to surf the markets and the geopolitical tension. So I strongly recommend you that book.
Yeah, no, it's he's an interesting character if you get into the weeds on some of his CIA connections and other stuff. Like there's a lot of stuff there and some different high level so a lot of dirt on different parts of that story, but it's very interesting because you see some of the different geopolitical and government connections and how it connects to markets and commodities and all these things. And I think we're in a similar period today where you kind of see all these different interacting forces on kind of the geopolitical chessboard. So it's definitely interesting times. So I think I really do appreciate you taking the time to come on. I think it was a great conversation. It's an interesting look from someone who's like watching these markets day to day and has experience working with different companies all over the world and have a lot of connections. I think are pretty interesting. So I think with that, we'll be wrapping up. Thanks for stopping by, and we'll see you next time.